I'm here to tell you right now that trading should be easy. Now, I don't mean that you should be making $1 million a year, but I'm telling you the way that you're looking at your charts is completely wrong. And the rule that I'm going to share with you will explain exactly why and where you should be buying and selling in the market every single day to have a higher win percentage in everything you're doing. I don't care what strategy you're using, you can apply this right now. Let's get to work. Now, the most important thing you're doing when you're trading, in my opinion, is understanding where buyers and sellers are. And this is going to be a quick way for me to demonstrate that and then go a little bit deeper as well. But it's important that we understand the baseline of what we're looking at, right? Because this is how I view the market as a whole. And I think that the best way to view it as a trader. Because if you're day trading and short-term trading, you're not really worried about tomorrow too much, right? Swing trading, I do that as well. And those kind of don't matter as much in the short term. You're more of longer-term investing mindset there. But when you're trying to make money in and out of the market throughout the day, you care about right now and the action that's right in front of you. And so that's really what we're at hand here. And you can see the developments and the levels that are here. And so the important way to view this is, you're going into this with the mentality of you come into your top zone, you expect sellers to step in here. You come into your bottom zone, you expect buyers to step in here. And you can go beyond this as well and look at, most ranges of how we kind of develop here. And you'll see that throughout the trading sessions on the day, this is how the market is typically responding and, really reacting, right? Of what's like taking place and why you're looking at it. Back and forth we go. Whether you're trending to the upside or to the downside, this is how you have to view the market. And so when I go into something like, for instance, like Apple, right? And this is just more of a stock viewpoint. We will get rid of all of our drawings here as well. But something that you can quickly see is you clearly on the 1 hour here, you can see we developed and then we started to make a clear cut level here as well, where you just kind of reject it. So we go and this is from a Thursday, you go into a Friday here, we gap up and we reject there for a bulk of the day where buyers can't push us through that level where sellers are. So it's important to view the market as we get aggressive, buying into that level, and then we get less aggressive as we find those levels. And when you start to mark these levels across the board, you put yourself in a better position of understanding where you should and should not be entering trades. And that's the most important thing that we have to be looking for across the board. Now, before I can go too far into anything, I want to let you guys know that you have to understand what you're looking for and why you're looking for those specific things. Specifically, like I said, buyers and sellers. Now, again, when you're looking at this and you can understand this and set that roadmap up every single day for trading, it will lead to further success in what you're looking for, and it will help you understand in your mind what you're looking at for the chart as well, and not just reacting with emotions throughout the day as well. We are reacting based off the chart, but we're not reacting based off of gut feelings, emotions, or anything along those lines. Let's go to the next part. Now, as we move into developing our plan and goals throughout the day, I'm going to show you how I'm doing it and how I'm setting up my trading sessions as well, because I think real experience is the best way to demonstrate this as well. So we look at this is from Friday or Thursday morning, sorry, it feels like a Friday, right? And so you can see you're breaking down here. And so what I do is I come to the market every day and I have my levels marked out. I have my zones marked out. And then I just roadmap that plan. For instance, if I go back to NASDAQ here, right? If I were to get above this range, I'm looking for the upside breakout, right? But as we're sitting in this range, I'm not really looking for that action, right? So as we're in this area, I'm not really expecting a breakout. Now, if we break out, I'm looking for the retest and continuation off that because we've now flipped this level from a resistance to now support. So it's important that we're identifying what we're looking at and how we can use these levels as signals moving throughout the market. So we look at our levels, we roadmap what's happening here, right? Key number one. So we know what's happening with SPY, Qs, NASDAQ, ES, etc. Then from there, I'll move into equities and stocks and different trade ideas that I'm looking at for NVIDIA and options and things along those lines. And if you're interested in seeing how we trade every single day, the link for that is down below. You can check that out for yourself. But again, this is how I'm marking it out and developing that plan for success, again, every single day. So again, it starts with step one and then moves into step two, understanding the roadmap and then how we move based off of that map as well. So then we're setting those goals for ourselves. Now, the other common problem I'm seeing is that we don't really know what our goal should be, whether we should be aiming for $1,000, $500, whatever it may be. And for everyone, this will be different. Like you may want to make more money than you may want to make less money than I'm trying to make throughout the session, right? And so it's important to know if we're entering a trade within this range, our goals are just to really trade that range, right? If we're trading from this range into the high, that's a win. That's what we're looking to do. Now, if we break out of this, this is a whole different setup. This is a whole different idea of breaking into your next level, your next resistance, or whatever that may be. But you have to understand you are playing that supply, that demand area when you're looking at this. So it's important to go into it with that mindset of not missing out or having FOMO or, oh, I wish I should have done this, the hindsight millionaire mentality. Because when you start to obsess over that part of it, you miss out on what you either could have done or you shouldn't have done, because you're setting these rules up for yourself as well that you're developing and looking at throughout the day. Now, a few key signs for looking at these as well, and we're going to go into more of those in a second, but number one of being bullish is you're developing higher lows. So if you are getting a higher low trend out of this when the market's starting out, then you're looking for buyers. So you can see you make a low, you're just making higher lows throughout the day. So you're looking for that bounce indirectly off that low as well. Now, if you're making lower highs, which again, you still are here as well, you can see as you push in, you make a lower high, then a lower high, you're looking for that rejection back down to the bottom of the range, and back and forth we go. Now, eventually structure will break, but it's important that you're respecting that plan and you understand where your gains, your losses are going to be developed, and also where you'll be getting in and out of those trades as well. And before I forget, I do also want to say, if you guys are interested in trading with prop firms, futures, right now, I think the best instant funded trader is Top One Futures. They recently launched back end of March and beginning of April. I would check them out. Personally, for me, you can do the challenges. And if you're a new trader, I would do challenges. I would not go straight to sim funded. But if you are getting straight to sim funded, this is the best deal out there. The 150K right now, it's 50% off with our code Hefe. The link is down below. But again, you get $6,000 on your drawdown. And yeah, I just think it's the best deal for their 150K account. Again, 5K of max withdrawal, you go straight to live, and you get tons of bonuses once you're live with them. I would check it out. It's who I'm using. And they have Project X, which is the best platform for trading futures, in my opinion. So again, who I'm using, links down below, appreciate it. I like to always just show what's working and why it's working, and then also show you a little bit behind the scenes of what's happening there as well. But it's also important that we're setting those mental goals with our trading so we understand what we need to be looking for and what's really a win, because sometimes we don't really know what that defined definition of what a win really is. And so you have to understand that. Now we're going to go directly into the strategy of how you're attacking this and how you can start applying this immediately. Because again, we know what we're looking for, why we're looking for it. We know that it works. And now we need to know exactly how we're spotting this in the market every single session throughout the trading session as well. Because again, once you start applying this, you'll start to understand exactly how you can profit off this every day. Now I'm going to show you how to find and mark these zones out for yourself, the supply and demand liquidity levels that you're looking for. Now, there's a few things that you're looking at in the market specifically. And let me break that down before we start breaking down what you're looking for and how to mark those out. You're looking for areas like this on whatever stock, future you're trying to trade. You're looking for areas to where you get these consolidation periods, right? Up here, followed by pretty drastic moves down. Because what this forms is there's liquidity and then there's illiquidity. Basically, there's not a lot of buyers or sellers in that action. So what you're doing here, basically, is you're developing lots of orders, lots of action, lots of history with not much. And what will happen here is when you push up or push down, it will be a lot quicker, right? So you'll move from one zone to the next pretty fast, right? But when you get into these areas right here, you'll move slow. So you don't want to focus on trading these areas. You want to focus on either entries or exits at those zones and at those areas. So I'm going to use an example from Friday, okay? And so it's always important to know from a top-down approach first. I can start from the 1 day, which is ideal, but you're not going to have as many levels or consolidation periods at that time, right? But what I will know is that those levels are far more important. For instance, the zone that we'll make up here around 226 to 220 or 217 is going to be very difficult to break through. However, in between here, it might happen a lot quicker. It might be more volatile. So we know exactly why and what we're looking for there as well. So that's why you see quick moves up, quick moves down on the stock specifically. So you can slowly scale down to start to find these levels. And what I found specifically that I like the most here, because I want to find the most recent level here, was the 1 hour time frame from Wednesday going into Thursday. So you've found your time frame that you're looking at. Now you want to develop, is this a level or is this a supply and demand zone that I'm going to mark out? Is this an area of liquidity? Now I call it the 3-bar rule. So whatever time frame you're on, you want to see 3 bars, 1, 2, 3, moderately close together. So for instance, right here, I wouldn't necessarily consider this one of the 3-bar rules because the bar went way up here. Right here, I would still consider this a 3-bar rule, 1, 2, 3. It actually had more, obviously, but this would still be pretty close because, again, you're still all the way inside that candle's range. You're not extending out of it, right? So, again, what you're looking for. So, as we go from Wednesday into Thursday, you can see what it kind of develops here. You sit in this range. You want to go from wherever your highest wick is here to the lowest to the body there. So this one's actually a little bit higher. If it was down here, I'd mark it down here. The body's here, the wick is up to here. So I know from 197 into 200 and basically 1, we're gonna have a lot of resistance, most likely. Now, obviously closer to 199 to 197 is where that resistance lies, but what I'm marking out there. Now, as you kind of let this progress, we'll go from the 1 hours where we mark that zone, and we'll go into like a 5 minutes so you can see that intraday action of kind of what develops and what happens there. Now, it was really important that we understand and how I break down either supply and demand or finding liquidity in the market in 2 different ways, right? The 3-bar rule, which make things pretty simple, and then the rule of the top-down approach. So we know that higher time frames are more respected and definitely will make you more money in the longer run of understanding where those levels are based off of higher time frames. That's why you see a lot of wicks and things happening along those lines. But now that we understand what we're looking for, how to market, how to look for it, now we're going to start applying it to our scheme and applying this to our trading as well, and look at some things that happened just this past week in the market also. So as it progresses, you can see we kind of, we bounce up, we bounce down, and let's mark out what and why we saw this. So it happens very quick. So you can see the next day, we kind of obviously move down. We end the day with a little bit of a bounce, but we gap up right into that overall level. And this is where things get interesting. And this marks out the exact trade that we took. So, and I like to, again, just show evidence so you guys don't just blindly have to believe me, right? So we go in, and this is very quick on the day for, I believe, Thursday, right? And as we look at Apple, you see we're coming into our level. We're looking at the rejection, and we're looking for the push back to the gap fill because there's no liquidity in that range, right? Again, back down to at least 195.2, maybe even down lower as we marked out here. So what we're looking for, very weak today, already rejecting out the 1 hour supply made from yesterday, gap fill 194.7. And as you can see what happens here, and this is the 5-minute time frame, within 10 minutes, you get the gap fill all the way back down. Again, very quick, very decisive there as well. Now, if I wanted to as well, I could go in here and I could mark out some smaller zones as well, right? Based off the 3-bar rule, where that level was right there, which again, we were kind of gap right above, so I wouldn't really mark it as a broken level. So you can see that happening there, which is ultimately where you found those buyers once again. And this goes on and on and on. Now, again, I use this a lot more with stocks and options, and then I use more of my key levels as well. But you can go into, for instance, NASDAQ. And again, this will help you out tremendously of understanding higher time frames where you should expect buyers or sellers to step in there as well. And you'll see time and time again this action play out and play out and play out. And so another interesting viewpoint here is if you go to something like the NASDAQ, and you can see 1, 2, 3. Not the prettiest action, but you can clearly see we stagnated around the 2 hour. You go to the 1 hour, and you can see it's a lot longer here developing as well. And so what you can do here is quickly develop what's happening. Now, number one, we already know we have a pretty significant level here based off of our previous low of this little swing high that we had. So that's automatically going to be a big spot, which we rejected at, obviously. But then the other part here is you're seeing all this type of action as well, to where you're actually seeing that 3-bar rule come into here. And you're seeing this is all going to be resistance, which again, you don't love seeing a massive level of resistance or a massive zone, but you're still seeing how that's playing out. You're pushing in, developing, making lower highs out of it, and then breaking out and pushing back down. And even here, you don't even have that much of overall support down here, but you can still see you quickly push back down into those lows, which just develops over and over and over. Now, again, the biggest takeaways that I'm looking at here is, number one, a top-down approach, which the weekly, daily are going to be more respected than the 1 hour, for instance. But I will say for most of the time, you'll be fine between the 1 hour and the 4 hour for finding these zones. When you go down to the 5 minute, the 15 minute, those will be less respected. That's just the way that it's going to work. So you need to understand that. So you always would prefer to find these on higher time frames. Very important to understand, very important to know. And you can even see some failed levels here as well, of what kind of happens in the reaction that you get when you break out of those. Because again, I want that to be clear and understood as well. So you can see we have a range up here, or a level that we had marked out. But then we kind of make up that 3-bar rule at these lows. You start bouncing out, you push back up, you reject off your level, back down. But look what happens when you eventually break out of this low here. You start respecting it, and then eventually you break. And the second you break, it's pretty bad, pretty quick. You go from basically 18,500 all the way down to lows of 18,000, 18,001 in a matter of 2.5 hours, if that. So it's, again, important to understand when these levels start to break, you start to get big reactions out of them, right? It's like imagining a dam holding water in. When the dam starts to break, to crack, and let pressure through, it typically gets pretty violent when it finally breaks through. The same thing here can be said for buyers and sellers that are trying to hold back that action. And that's how you're interpreting this. So again, the biggest metrics that we're looking at here are, number one, is, are we trading a range, which again can still be profitable if you're trading something like futures, right? Very important to understand that that's what you're looking at, right? Are you trading those ranges back and forth? Boom. Or are you going to trade that breakout? Now, in theory, what you would love to see is a break and retest of these trends for key retest and continuation. And oftentimes you will get that type of action, right? Now, sometimes it'll be quick if you're getting not a very decisive market. But again, sometimes you'll get the break, the retest, continuation, which is something that we're always looking for, especially on smaller time frames, right? So we go back here on the 5 minute. You can see, again, not the best, but you break, you do retest, and then you shoot back down. So it's again about knowing what you're looking for, knowing what you're looking at, and knowing what to be spotting for that continuation as well. If you have any questions, please comment down below. The Twitter link, the Instagram link, all that stuff is down there as well. I appreciate you guys for watching. If you have questions, please let me know as well. Have a good one, traders.